If you follow fleet technology or enterprise SaaS stocks, PowerFleet just dropped one of the most compelling earnings calls of the year, and most investors haven't dug into the details yet. We're breaking down the 10 biggest takeaways from their Q4 and full year 2026 results, counting down from number 10 to the single most important thing you need to know. Stay with us, because number 1 could genuinely change how you think about this company's trajectory. Coming in at number 10, revenue hit $444 million for the full year, growing 22% year over year. What makes that number even more telling is the mix shift. Services revenue climbed to 81% of total revenue, up from 76% just a year ago. Higher recurring revenue means higher margins and stronger predictability, and management made clear this shift is entirely deliberate. At number 9, AI video bookings surged more than 50% during fiscal 2026, outpacing the broader market for AI-powered fleet safety solutions. This is one of the 2 highest margin, highest differentiation segments in the entire portfolio, and the growth rate signals that enterprise customers are rapidly adopting PowerFleet's capabilities here. Number 8 is the EBITDA story, and it's a big one. Adjusted EBITDA grew 44% to $97 million for the full year, with margins expanding 330 basis points to nearly 22%. In Q4 alone, EBITDA margins hit 23%, a 5 percentage point jump year over year. That kind of operating leverage, achieved while still investing in growth, speaks to the strength of the underlying model. At number 7, On-Site Solutions revenue jumped 39%, fueled by accelerating North America sales. Alongside AI video, On-Site is the other pillar of PowerFleet's highest ARPU product set, and the FEMSA case study shows exactly why. The world's largest Coca-Cola bottler started with on-road fleet tracking, added AI video, and is now expanding into warehouse operations. That land and expand motion is a powerful growth engine. Number 6 is the free cash flow inflection point. After burning $13.7 million in the first half of fiscal 2026, the business generated positive free cash flow of $4.1 million in the second half. Both Q3 and Q4 were free cash flow positive, meaning the company is exiting the year with real underlying cash generation finally coming through, and management says this trend will only strengthen heading into fiscal 2027. At number 5, the South African National Treasury contract stands as the single largest win in PowerFleet's history. With an anticipated total contract value of $100 to $120 million over 5 years covering 60,000 assets now moving into deployment planning, this deal is powered by Unity's AI video and safety capabilities in partnership with MTN. Revenue contribution is expected to begin in late fiscal 2027 and accelerate fully into 2028. Number 4 is the brand new Accenture partnership. Accenture has designated PowerFleet as a strategic safety solutions innovation partner and is actively recommending the full Unity portfolio to its global enterprise clients. This opens a high-quality, large-scale go-to-market channel without a proportional increase in PowerFleet's own cost base, a true force multiplier for pipeline expansion. At number 3, net leverage dropped from 3.39x to 2.47x during fiscal 2026, nearly a full turn of deleveraging in a single year. Management has set a target of getting comfortably below 2x by the end of fiscal 2027, with a longer-term sweet spot of 1.5 to 1.75x. Lower leverage means reduced interest expense and greater financial flexibility to fund growth priorities. Number 2 is the $12 million annualized efficiency program underway for fiscal 2027. Chief People Officer Melissa Ingram outlined 3 focus areas: organizational simplification, product line rationalization, and expanded AI and automation in customer support. These savings are expected to flow through primarily in the second half of fiscal 2027, reinforcing the back-half weighted profit ramp the company has guided investors to expect. And the number 1 takeaway from this earnings call is the fiscal 2027 guidance itself. PowerFleet is targeting revenue of $485 to $490 million, adjusted EBITDA of $122 to $125 million, representing roughly 27% growth at the midpoint, and for the first time, positive free cash flow in the range of $30 to $35 million. After 2 years of integration and investment, this guidance signals that the business is now shifting into a self-funding, compounding growth phase, and that is the thesis investors have been waiting to see proven out. Those are your top 10 takeaways from PowerFleet's Q4 and full year 2026 earnings call. If you found this breakdown useful, give it a like and subscribe so you don't miss future deep dives into earnings calls and tech stock catalysts.